The South African National Treasury is collaboration with the US Department of the Treasury launched the Regional Banking Dialogue for Sub-Saharan Africa in Cape Town this week. Treasury says that the dialogue helped South Africa learn lessons in anti-money laundering and terror financing and the type of measures other countries are taking. The launch of the Regional Banking Dialogue aims to provide an avenue for cooperation and facilitate active regional dialogue on anti-money laundering and combating the financing of terrorism. Meanwhile, the United States identified 4 people allegedly tied to the leader of an ISIS cell in South Africa, and it's believed that the group provided technical, financial and material support to the militant group. Washington says that it remains committed to exposing and disrupting the financing of militant groups in Africa. Torrential floods in West Africa are expected to affect food security. About 4 million small subsistence farmers in over a dozen countries in West and Central Africa have seen their crops decimated by unusually heavy flooding. The floods have destroyed harvests for this season, whilst nearly 1 million hectares of farmland across the region remains underwater.
To harvest his sorghum crop, farmer Kuman Levis now wades through knee-deep waters. Weeks after the last heavy rains, his farm, south of Chad's capital N'Djamena, remains submerged. It's a story playing out across West and Central Africa, where unprecedented floods have threatened food security for years to come. What little Levis can salvage, he places in a bowl. Floating in the waters, he says, have destroyed nearly all his crop.
You have seen for yourself the destruction of my field by this flood that spares nothing. What you see is about all that I could save by working in the water, and it doesn't represent 10% of what I harvested before. It's the same for all the farmers here. I don't know how we're going to manage, but the next few days are going to be difficult because our village is also flooded.
Nearly 2.5 million acres of farmland in West and Central Africa have been submerged in the floods. In Nigeria, for example, around 1.4 million acres have been destroyed, according to the government. Preliminary reports show that as much as 30% of the maize crop in Nigeria's northeastern and middle belt states, where most of Nigeria's food is grown, could have been lost. Even before the floods, West and Central Africa was facing what aid groups have described as a perfect storm of food insecurity. Prolonged drought last year, conflict in the Sahel, the global health crisis and the fallout from the war in Ukraine have all contributed to deteriorating agricultural output. Bernadette Harding grows millet near Levis's farm.
The water has washed away everything and we are powerless in the face of this catastrophe. Even to access this field, we have to take 2 hours by dugout canoe with the risk of harmful insects and snakes that pollute the water. What I was able to save from the field can't sustain our family with food for a month. We cannot afford to buy sorghum in the market. What is certain is that we will starve in winter.
With output down, the cost of food has risen. In the nearby town, Kunari, Mahmoud Yusuf says a kilogram of cereal has gone up by about 50%. Future harvests could also struggle. The floods have washed nutrients from the soil. The outlook for food security and for those who earn their livings from the land could be bleak.
Now, Global Integrity, Financial Integrity is an advocacy group based in Washington, D.C., and they've been at the forefront of raising awareness regarding the wide-ranging effects of illicit financial flows to financial systems and global economy, as well as exacerbating effects. We're now joined by Policy Director at the organisation, Lakshmi Kumar. Thank you so much indeed for joining us. Welcome to the programme.
No, thank you. It's a pleasure to be here.
All right, so we are busy worried about potentially getting grey-listed because of our financial systems and the challenges that we're facing. And I just wonder, what are we most vulnerable to that you've been able to observe?
No, that's an excellent question. And I think one of the big key issues that have emerged in the last couple of years is, I'm sure as you know, in South Africa has been the sort of slew of corruption scandals. And at the heart of any kind of illicit financial flow, what we've seen across the world, and this is based on a 30-year study that the World Bank did on sort of corruption-related cases, that they found that in the vast majority of cases, the ways in which individuals are able to hide ill-gotten gains is through the use of anonymous companies and through shell companies. So when you see sort of capital outflows, it's primarily a couple of things. In South Africa's case, it has a rich extractive sector. So you're going to see capital outflows through the commodities markets in the extractive sector, especially through gold. But additionally, you're also able to facilitate this movement through the use of anonymous companies, which is why I know the measures of the South African government that are in the works right now will be critical going forward next year, is to have a strong beneficial ownership registry. Because this ability to identify who owns a company, who's the natural person behind the company, is critical when you're trying to find people who've managed to smuggle away ill-gotten gains, because it is always through a company structure of some sort, both domestically, but also the ability to move that money outside South Africa to the rest of the world is facilitated primarily through anonymous companies. So we really see that as the number one arsenal in addressing the illicit financial flow problem.
Are some of these transactions happening within global companies affecting transfers?
And you know, this is the unfortunate truth, which is that this is very much a product, so to speak, of money leaving the developing world and finding home in the developed world. So we did a report in a couple of years ago, looking at the amount of money that was sort of leaving the African continent and being invested in US real estate, for instance. And we were able to see that over 50% of money that was laundered through US real estate was all tied to politicians that we could track 26 different countries. And so what you're really seeing is this participation of you need two hands to clap, so to speak. So the only way criminal actors or the corrupt or individuals that have gotten ill-gotten gains are able to move those transactions is because there are a whole suite of professionals willing to assist them and help them find safe haven in the financial centers of the world. So it is really very much the responsibility in South Africa to try and fix the system so that it doesn't become easy to sort of hide and launder money within the South African economy, but also there are effects to ensure that there are effective checks to prevent money quite so easily leaving the South African financial system and therefore finding its way into places like the United States or the UK or other financial centers where the rich, the very wealthy, and the criminally very wealthy also like to hide their assets. So it is the responsibility of both sides of the equation.
But I would think then that actually it's all the countries across the continent, because you could have money exiting in a visible way in South Africa, get laundered in the DRC, and then end up in the United States, and that these countries in between become the challenge.
And you're right, and we do see that. And what we have tried to do, and what we've seen is that you've seen neighboring countries like Kenya effectively set up a beneficial ownership registry. You've seen other countries sort of in East and Southern Africa work towards it. Zambia has made tremendous progress, and it's a real shining example of the progress that's been made. Now, what I will say is that as you see countries that are intermediate destinations, DRC is an excellent example, because with a country like DRC, you can move extractive commodities, as in you can move goods that are traded across the border. It's much harder to move financial sort of money moving through the financial system as easily, simply because DRC is considered a high-risk financial country, which is why there is often the question when it comes with DRC, especially of the issue of gold. Is gold moving is DRC gold being moved to Uganda, being mislabeled as Ugandan gold, and then being sold on to the UAE and consequently Switzerland? So you do see the role of intermediate countries, and which is why when you're trying to plot an effective anti-money laundering strategy, it's in the source, intermediate destination, and the final destination are all equal players. And that's especially when you're talking about illicit money that's moving through trade or goods. But when you're talking about financial transactions, it is just as important. And that's why in the last decade or so, we have worked and we sort of tried to, over 100 countries today have committed to setting up beneficial ownership registries. So we're really moving the needle forward. It's not perfect, but South Africa being such a significant economy in the region, it's a huge blot that it hasn't really made the progress that it should be making towards a strong beneficial ownership registry.
How are we doing on the continent? Because there is a huge informal sector where, a lot of people aren't banked even, and cash is moving around.
I will say this, I'm someone who's worked extensively in the developing world. And I think when we start implementing anti-money laundering laws, we have to be very careful that we don't push people who are already in the informal economy further outside of it and don't provide them enough pathways to be formalized. And so the informal economy is a structure of an economy that's going to take a decade or 2 decades before that gets formalized. And it's not going to change overnight. And my recommendation has always been, no matter where we work, is if you're going to put in controls to address this movement of illicit goods, what you should also do is be sensitive to the fact that there exists an informal economy. Because we often hear things like, oh, why don't we computerize and automate all trade transactions going across a border? But that's not helpful because a lot of trade is informal trade. It isn't formalized. So you're going to have to come up with solutions that are unique to that country experience and think about, are there other ways of slowly formalizing the informal sector, but not just passing anti-money laundering laws that further push the informal sector underground and in fact expose them to more illicit finance.
We're seeing an increased number of militant groups and rebel groups across the continent, and they seem to be getting better and better resource, which means they're getting money from somewhere. How is it getting through? A lot of the times with a lot of militant groups, and I think very recently there was the report about how Al-Shabaab is able to now pay close to $1 million a month out to its fighters, which is a staggering amount of money. There are businesses that don't have that kind of money, and in a lot of cases, especially because we've seen that the bulk of the illicit finance or loss of revenues coming from the continent is through the sale of commodities. The reason they lend themselves to being money laundered or being able to move is they are low weight, high value, and they're untraceable, and they are very dependent on a cash economy. Now, this is true of gold, diamonds, and a whole host of other minerals that sort of work under these pillars and therefore are perfect for illicit financial flows. Now, in the case of some of the more established groups, like you see like Al-Shabaab, a lot of it is because they control territories. They're able to extract rent collection. They're able to extract tax collection, which have also increased their revenues. But I will say the primary means that we are seeing is through the exploitation of extractive industries and other natural resources. So we also see small amounts with some groups going, at one point we saw with Al-Shabaab, there was a concern about ivory trafficking. So to a smaller extent, you see other natural resource commodities also being affected, but it is really extractives.
the extractive sector in the continent has become extremely lucrative and valuable, and that in turn helps fuel further conflict.
How is crypto creating another layer of difficulty?
Crypto has been a buzzword for the entirety of the pandemic, hasn't it? And I will say this, I think what I would like to say about crypto, and I think what makes crypto particularly interesting, is when you have illicit actors moving through crypto, it provides a degree of untraceability that the financial system does not provide, and that it is much easier to obscure or keep your identity opaque. However, at the same time, as I'm sure you've seen in the last couple of months, there have been massive crypto collapses. And what we see overall, and I want to sort of distinguish here, one is the developmental consequences of individuals investing in crypto, and there is the second, which is the illicit finance concept. They are interrelated, but I would like to discuss them separately. From the illicit financial flow concept, crypto, you must keep in mind, when you're a criminal actor, you look at your money like any businessman looks at the money. You think of it as long-term horizons. You very often want to save your money so that you can ensure there's generational wealth. So a lot of the times we don't see actors putting all of their money in crypto. They're very smart. They split it across. And I would say more than crypto, what I would think would be extremely vulnerable is real estate. And especially with such a valuable economy like South Africa, money laundering through real estate is a far greater risk than cryptocurrency, because it is a guaranteed asset that will give you returns, long-term returns, and you don't have the risk of the price bottoming out. So we do see some money being moved to crypto and moved out, but a lot of the times it is a much smaller portion compared to more traditional means of hiding or moving illicit financial flows. What I will say is very unfortunate is one of the largest Ponzi scams in the world, conducted by this Bulgarian woman who is based in the UK, called Ruja Ignatova, which concerned the OneCoin scam. That has affected almost the entire continent, all of Sub-Saharan Africa, the Middle East, South Asia, the US, the UK. It's tricked so many vulnerable people who aren't able to have the same kind of returns by just keeping their money in a bank account, or who don't have a bank account. A lot of them put money into this and were essentially robbed of their life savings. So that's the second developmental effect you see of people who are unaware and there isn't enough education of investing in cryptocurrency. The problem is that it pushes vulnerable people into more economically desperate measures, which then in turn has an impact on illicit financial flows. And I think it's really important to appreciate both these aspects of cryptocurrency. But I will say, real estate money laundering, that should be the real focus in large parts of the continent, because that's where the income is stable. You can hold on to the asset for a very long time, and it is a guaranteed generator of revenue and profits.
Lakshmi, it's been great talking to you. Thank you for your insights and analysis. Greatly appreciated. Thank you.
No, thank you. It's a pleasure to be here.
Thank you. All right, that's Lakshmi Kumar, who's Policy Director at the organisation, talking to us about money laundering and some of the challenges that we're facing as a continent. And it seems as if property is a particularly vulnerable area for us, as well as commodities, of course.